all of these, but what I am going to do is focus on a few of them. So I've split them into two halves, so bank on one half and non-bank on the other. Definitely on the non-bank side, it's been a really growing kind of industry over the last 15, 20 years as we've tried to kind of diversify away from sources of funding being solely about banks. Banking is still the most greatest funder of SMEs across the UK. It's something like 60, 65% all funds that go into businesses are generated and come out of the banking industry and the financial services industry. But again, increasingly, there is a definite role for other partners, for other funders to actually play a hugely important role in all of that. So we're just going to touch on a couple of these. And again, if there's any kind of questions that you get, then either save it at the end or pop it in the chat and we'll happily chat through. So look at the bank side of things. Again, I'm not going to spend too much time on all of these. I'll just touch on a couple really. So first of all is the loan. This is the most common and the most popular way that businesses will get funded. And this is usually the answer to the capital investment question that we pose right at the start. So you've got an item, you've got something you're going to pay out for. But you're not going to repay that in month one. You're going to expect that that's going to be paid for bit by bit, month by month, over the course of a number of years. And so the loan is a good vehicle to be able to do that. Most financial services industries will be able to work with you to kind of assess whether it's in a position to be able to support you, understand what the money's being spent on, and then give you what's called an agreement in principle. So that would be a sort of a letter or an offer really to say, yeah, we're happy to lend you X amount of pounds subject to these terms. And that they will be things like any conditions around perhaps security. That might be something that crops up depending on how much is being asked for. The interest rates, any fees, etc., that are attached to it. So without costing you any money, you can kind of look at it in terms of an option in front of you, and then determine whether that's actually the right way forward for you to go as a business. The one other thing I would always say as well with loans, and you know, this is where I sort of try and, you know, please bear with me and try and most people will often, when I say to them, if you get an agreement in principle, try and borrow the money over as long a period of time as you possibly can. And most people then who perhaps don't know me will say, well, yeah, you're bound to say that because the longer I have it out for, the more interest you earn over a period of time. That is correct, okay? However, the point I'm trying to make here is that actually what it secures is the monthly repayment. If it's over, let's say it's over 10 years rather than 5 years, the monthly repayment that you have to make month in and month out is much lower over 10 years rather than 5 years. And so therefore, it's a kind of more important angle. It brings those costs down as low as you can possibly have it and get it. If you then have an opportunity, things go particularly well, most types of funding, most opportunities will allow you to actually overpay without penalty. So you could have the best of both worlds. It might be the quietest time in your business's year, but you still got to make that repayment. So you've done the right thing by keeping it as low as you can. But then if you have a year where things have gone really, really well, then you can knock lump sums off without a penalty. So that would be one kind of suggestion to really think about in terms of how long you borrow the money over, and then ask and clarify whether it's possible to knock lump sums off of that particular debt as and when you wish without penalty. I will just mention as well invoice finance. Invoice finance is a particularly important type of funding solution that will help particularly growing businesses where they have physical products. So again, I mentioned Sainsbury's in that example that we mentioned earlier. And the way that invoice finance potentially would work for that particular business was it would take the £70,000 invoice from Sainsbury's, and as soon as that invoice is produced, it would be able to say, yeah, we like Sainsbury's, good company, We've got lots of other businesses that work with Sainsbury's. They're okay. We know you get the money, but you've got to wait the 90 days. So if you want and if you need, we will give you a facility of 70, 80% of whatever that invoice amount is, so that you can access as much as you need to pay for ingredients, for materials, for wages, for premises costs, etc. So potentially it's a way of growing the cash flow, the working capital cushion that you might need as you are busier. And then, of course, it shrinks as and when perhaps things get a little bit quieter for you. So, so invoice finance, again, is one sort of type of funding that might be quite useful for people. Now, if I move over to the non-bank column, that isn't a typing error right at the top, the 3 Fs. Does anyone have any idea what the 3 Fs might stand for? A particularly popular way and source of where people might access funding for in the early stages. Who's got
friends and family?
Fantastic. Someone's been to my courses and knows my sense of humour already. So well done. Fantastic. Yeah, friends, fools, and families. Basically, it's the most popular. In addition to your own savings, it's the most popular form of and opportunity to access funding, particularly in those early stages. People just love you. They love you as a friend, as a family member, etc., and just want you and to support you in the best possible way. By default, however, I would always say as well, it's particularly important just to make sure that you agree what exactly is agreed there, and they understand that if they're giving you, I don't know, £5,000 or whatever to invest in your business, yeah, it might take a long time for you to be able to work towards paying that back. So you just don't want to risk destroying friends and family relationship. Just kind of just to agree in the terms and conditions. But yeah, friends, family, fools, in addition to kind of savings, that will be often a big kind of kickstart to funding that's actually needed for businesses. Sweat equity is a strange one, and probably it's worth mentioning. I'll give you an example. That's probably the easiest way of doing it. So I had a young founder, or crikey, about eight years ago, came to see me. He wanted £10,000. He'd done some research on an app idea around mental health through one of these universities that he was studying at the time. Now, basically, he wanted £10,000 to develop the app. So he's done all the research, he's done the focus groups, he's done the forums, he's kind of identified where he thinks he's heading with it. But he needed then the £10,000 to actually build the app to then go to the next stage. Now, I wasn't able to help him. I wasn't able to lend him that money, and the reason twofold really. One was the. Can I just get you to pop on mute? I think it's Lorraine. Thank you. Yeah, I couldn't give him the money for two reasons really. One was obviously thinking about him, very young in his journey, so we'll saddle him with sort of £10,000 worth of debt that we couldn't actually see and know where he was going to get repaid from. And secondly, it was that angle of we weren't yet clear because we didn't know how it would test. We didn't know what the feedback would be as we get to the next stage. We couldn't be clear on where the income was going to be generated from in order to repay any debt. So we weren't able to give him that money there and then. But what we did do, we did talk to him about the idea of sweat equity. And the way this works is it's very much about trying to identify the skill area that you are looking for. So in this person's case, it was the app developer and very much those skills. And what he could do, if he could find someone who had those skills and was prepared to inject the time, the effort, the energy into what the business was trying to do, you could create that first draft, that first run and prototype of the app, and actually allow you to test it, but without borrowing any money. You could get it to that stage where you could then take it to potential users, potential customers, potential stakeholders. You could actually say, look, this is what it feels like. This is what it looks like. What do you think about it? And then start to gauge where you might be able to drive some of that income. Now, in return for doing that, what the person with the app development skills got to gain was work experience, but also what they did is as they achieved certain milestones in terms of developing the app, they were rewarded with small amounts of shareholding in the company. so that both of them, the only way any of them got any value from working well together was the fact that the value of the company kind of increased over time. So that was a really good way. And when I last sort of heard from him, absolutely doing really well. He had to go to a different university to find the right person, because it's not necessarily just about the right skills, it's also about the right fit, the right team member, etc. But yeah, a fantastic partnership that they were able to sort of find and locate. Crowdfunding, that was mentioned by a couple of you in terms of the ideas that you put forward. Crowdfunding, again, a really popular way of potentially people finding access to funds. There's again two particular types of ways that, as a young business or social enterprise, you might be able to access some funding through crowdfunding. Various different platforms. One is what they effectively call a sort of benefits type crowdfunder. So this is where you're effectively asking people to kind of donate towards your business or social enterprise idea. However, what you're going to give them, you're not going to give them a return on their money. You're not going to give them a share in the business or anything like that. But what you are going to do, you're going to reward them with something that kind of recognizes, you know, the effort and their donation. And you might think, well, why would they do that then? And again, a lot of it is to do with people's passion to help young businesses, perhaps to help certain sectors, certain geographies, or perhaps to tie in with the benefit. So again, I've got a really good example of a young female fashion designer that I worked with a few years ago. She used a crowdfunding campaign successfully to actually fundraise for her launch night that she was able to put on. And what she did to encourage some of those donations coming forward, she actually said, if anyone donates a minimum of £100, then they can have a front row VIP seat for the night of the launch. And for the right people, that was absolutely the benefit that they were looking for, to be there on the night, be very proud of the part that they'd played in it all. And that was a good experience for her. The other type of crowdfunding is then access to bigger amounts of money, but in return, what investors are looking for is they're looking for a stake in the company. There is a really good website which does summarize all of the different crowdfunding platforms that operate in the UK, and that's called the UKCFA. So it stands for the UK Crowdfunding Association. So UKCFA, that is a good place to go to in case you wanted to investigate, have a look at some of the pictures that are up there from some of the other businesses, get some ideas, have a look at how they all work, how they all operate. Some of them, for example, will have different rules and different pricing. So, for example, some crowdfunders will say, well, if you needed £10,000 and you don't get £10,000, well, you're not having any of it. Whereas others will say, well, if you get 75% of the total, then you can have that. So again, be clear of which platform may perhaps work best for you in your sort of plans. Angels and investors very much about finding individuals, perhaps with obviously with the financial resource, but possibly with skills, with contacts, with experience that might be able to propel the business even further forward. These are typically people that have made money from perhaps the business world in the past, and to be honest, they've missed the buzz of being involved. They've kind of been wealthy from their exertions in the past, but they're looking to help and support other businesses, you know, achieve very much the same sort of thing. So you often hear a phrase which is, don't just ask for the money, ask for smart money. And again, that's what investors really like to hear. They want to know that their expertise, their knowledge, their contacts will be asked for and sought out for. They won't just be looked at as a kind of a £50 note sitting at the end of the table. That is something that they want to do. They want to be involved with all of your aims and your plans there. Again, there's another website that you can have a look at, which really starts to profile some of the angel networks across the country, and that is run by an organisation called the UKBAA. So the UK Business Angels Association, UKBAA. That is a good website to be able to sort of start to profile some of the angel networks. And what you're starting to find as well, really encouragingly, is that sort of a lot of the angel networks and some of the funders are actually really looking at demographics of founders where there's a huge underrepresentation in the past. So when we look at different diverse founders, when we look at different kind of, certainly with female founders as well, the proportion of funds, particularly around an investment, that are going to those particular groups are nowhere near where they should be. And so certain funds, certain partnerships are being popping up in order to try and get more funds directed to where it's needed absolutely most. So that's a really important one to perhaps have a look at. Grants, I will sort of mention, grants are really popular with people. I don't know why. Perhaps it could be the fact that they don't have to be paid back. That's usually the way that they work. But whilst they don't have to be paid back, the funder, the organisation, whoever it is that's giving you the money, is very much looking for something now, be it by way of return, of impact in terms of how people have been supported with that money coming through. So various different businesses, might find that they have more chance of getting grants than particularly with others. I would say that if your business is very much around a charitable or a social enterprise type ambition, then you probably will have a greater chance of securing some grant funds than others. In a traditional business, the vast majority of grant funds are targeted towards particularly innovative businesses. So where, for example, the government might see a sort of an influx of jobs and economic opportunities over the years if they invest at the right sort of stage. So just a couple of kind of signposts here. I'll mention Innovate UK, which is the UK government's portal. There's all sorts of different kind of competitions and funds that get advertised through that fairly regularly. So it's one of those that's worth checking in on every week or every month or so. NatWest has got a partnership, again, you can access for free whether you bank with us or not, with an organisation called Swoop. So NatWest Swoop, if you put that into your search engine, Swoop spelled SWOOP, and that will take you to our partnership, which allows organisations to input their details in terms of who they are, where they're based, what sector they're actually based and set within, and it will then search the market to see whether there's actually any grant pots that might be eligible for. And then thirdly, I'll mention an organisation called Funding Central. And again, you do have to set up a profile, but you don't have to pay anything for the minimum sort of level of service. But this will allow, particularly for social enterprise and charitable organisations, this will allow them to search the market in terms of what's on offer and what they might be eligible for. And the thing really for grants is to not to just apply for everything, is to sort of try and have a look and see what you may be eligible for, and then perhaps prioritize the top 2 or 3 that you think you're most closely suited to. So yeah, grants are, I don't want to pretend that there's millions and millions of grants out there, but they are always worth having a look at and keeping tabs on also. And contracts I'll also mention as well. Contracts here, I'm referring to the public sector. So any area of government spend, there is a portal called Contracts Finder. So if you were to go into the main gov.uk website, and then in the search bar, if you put in Contracts Finder, it will take you to a portal which will help advertise any tenders that have been advertised from any part of government for £12,000 or more. So what you can do, you can sign up, you can put your kind of filters, etc., in terms of the area of work that you're most interested in, and then it will produce any results that you might be eligible for or particularly interested in. And so what I find particularly useful as well is not just thinking about it from what could I apply for today, but also thinking about, you might have some brilliant bits of work that are ideally describe what you are all about, but they might be too big or too national or whatever it might be. What I would say is, if that bit of work is ideal in terms of what you offer, follow it all the way through until you see which company ultimately wins the national contract, And then what you do is you try and pitch, you try and tender to be a subcontractor. So you sort of say, you've won the national contract, well done. I operate in this part of town, in this part of the country. I'd love to work with you because I think I could do some great stuff with you. So that's always worth, trying to size up some of the opportunities. And then the last thing I'll mention before I kind of open up to questions is the Startup Loan Scheme. Fantastic scheme opened by the government. Oh, crikey, I think about 11 years ago. I think now we've just gone through 100,000 founders that have had support through the Startup Loan Scheme. And this effectively entitles any founder up to £25,000 worth of funding for their business. So actually, if you're coming together with perhaps someone else, you could potentially be able to access £25,000 each. So put that both into the business. That could be £50,000 to help get you started. The Startup Loan Support Partners operate right across the country. So you can find them through the main government startup loan website. That will direct you to wherever you happen to be based, and therefore who the startup loan partner might be. And the one sort of thing to also mention here is, although it says startup loan, the actual qualification to be a startup loan beneficiary is up to 3 years of your business being formed. So, rightly, people are launching, they're testing, they're kind of working, finding their feet, very much like the analogy that we mentioned in terms of the stepping stones. And they might reach a time when perhaps 2 years in, 2.5 years in, they might think, okay, I know exactly what I'd spend that money on. The Startup Loan Scheme potentially may be there able to help and assist them. So yeah, you could potentially qualify up to 3 years of age as a business there for the Startup Loan Scheme. So right, I've rattled on for an awful long time. I hope that there's been a little bit of information that has given you some insight, given you some ideas, some things perhaps you might want to follow up in. But very happy to sort of open up to any questions. So if anyone's got anything that you want to raise, then please do so, and I'll be happy to try and answer them as best I can. Has anyone got any questions?